The following is a paid program. Talk 103.7 WTIP and Cable Channel 7 welcome you into Financially Speaking with Jim Taunton. Find us live on radio, TV, the IPX Media app, and on YouTube. Just search Financially Speaking NC or get the link at WTIPFM.com. The opinions expressed in this show are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities and investment advisory services are offered through Genoa Wealth Management Incorporated, member FINRA SIPC. Now, here's your host for Financially Speaking, certified financial advisor, Jim Taunton.
Greetings to the WTIB 103.7 FM radio audience, as well as our viewers on the YouTube channel, Financially Speaking NC. Appreciate everyone joining us. Keep in mind that this is a listener participation program, always has been, always will be. I'd love to talk to you about something that's important to you personally. The number here is 252-561-TALK, 561-8255. If you call with a question, your name goes into the drawing for the Identifitua Nontavola, and I'll even pay the tip, and probably a couple more programs we'll be doing a drawing. Also, remember, you can, on YouTube, go to the chat box at the bottom and send me a question that way if you're too shy to go on the air on the telephone. So, and it's Financially Speaking NC. Put that in the search bar and you'll find it. And again, 252-561-TALK, 561-8255. I've got some good information for you, but call me during the break. We'll take your call first when we come back. I'll talk to you in a couple of minutes.
Aiden Golf and Country Club invites you to become a member. Come tour our beautiful clubhouse, ballroom, and facilities. For a quality golf experience, sign up for our discounted special membership rates. Low monthly dues with no quarterly food minimum or assessments. Folks love to play golf at Aiden Golf and Country Club. Cool off at the pool all summer. Enjoy excellent food and beverages from the snack bar. Even store your own cart, unless you like to walk. Call 746-3389 for special limited membership rates at the Aiden Golf and Country Club.
My practice has been built on accessibility, responsiveness, and a willingness to be proactive for my clients. I'm not afraid to make recommendations relating to your investments and planning. I do hope all of your financial decisions are good ones, but let's not rely on hope. Let's roll up our sleeves and get to work.
Jim has attained 3 professional designations: Certified Financial Planner, Chartered Life Underwriter, and Chartered Financial Consultant, which entails 20 courses of study with examinations and a comprehensive national board exam, administered by the Certified Financial Planning Board. Jim has been practicing in financial services since 1979, which includes investing, planning, and insurance to help you meet your financial goals. Among the many awards Jim has received in his career is his selection to the Guide of the Top Financial Planners by the Consumer Research Council of America. So if you want to work with someone who is working for you, call Jim at 756-4700 or email him at planning@financiallyspeaking.com. That's 756-4700 and planning@financiallyspeaking.com.
Welcome back to Financially Speaking. Jim Taunton here, and nothing from the producer. Let's see. Yep, correct. So we will proceed with the information I've given you, but interrupt the monologue at any point in time, please. I would be most grateful. The number is 252-561-TALK, 561-8255. Again, call the question. Your name goes into the drawing for the Identifitua Nontavola. I'll even pay the tip. All right. I'm going to start out talking about very, very big picture. Over the last 80 some odd years, the S&P 500, which is a broad measure of the stock market, 500 biggest companies in the stock market, it has averaged 10.5% annually. 10.5 over 80 some odd years. Now, is there any reason for us to believe that the next 25 years won't be something like the last 80 something years. There is no reason to believe that. If it is different, I don't have a crystal ball and you don't either. So we have to really plan and invest as though the next 25 years are going to be something like the last 80. Okay. That's all we can do. Invest based on history and facts and all the information we can ascertain. All right. But what I want to tell you about that 10.5% is this, and this is probably going to shock a few people. That 10.5%, 65% of that number is based on the appreciation of share prices. Wait a minute, Jim. 65% is share price. I thought all of it was share price. I thought the 10.5% was just the appreciation of the prices of the stocks in the S&P 500. No. It also includes reinvestment of the dividends that those stocks are paying. 35% of that 10.5% return is the reinvestment of the dividends that those stocks pay, going back in and buying more shares of those stocks. Compounding interest, so to speak, really compounding dividends. But it is a compounding effect that over time makes a huge difference in your total return. If you want, high yield growth stocks that have increased dividends over time, that's the way to go. Don't go out and try to buy a high yielding stock today, because you may not know how that became a high yielding stock. And what I mean is the major way that a stock becomes a very high yielding stock, say paying an 8% dividend, is because the price of the stock has diminished over time. And as the price of the stock goes down, the dividend yield goes up. So you may be buying a falling knife, so to speak. So you got to be very careful about that. Really, the best thing to do is to buy good, solid companies that have increased their dividends because of their earnings, or consistent earnings over the years. There are companies that have increased their dividends every year for the last 30 years. That is a much better investment than doing a search for the highest yielding stocks and buying a basket of 5 of those. You may be buying some trouble. So that's a very big picture. And let's talk about today and this coming year. And I talked about that last week. And I'm telling you, most of what I'm seeing is congruent with what I was sharing with you last week. And I was very positive and bullish last week about the market, and what I'm going to share now is very similar. And this is all coming from third-party sources, and these are sources that we can trust. Let's talk about economics first of all. Why do we even focus on economics? What does that have to do with my investment plan? With all the speculation concerning interest rates and inflation, economic growth, it impacts markets directly. Asset prices change not just in response to economic change, but also in anticipation of the change. I've heard an adage, sell the rumor and buy the event. Another way to put it. Portfolio construction must account for economic change, both expected and unexpected, over time. You make adjustments, strategic adjustments, maybe not tactical adjustments. You're not trying to time markets, time lows and highs. No one can do that consistently. But this particular firm expects further economic change in 2024, go figure. Their base case includes inflation returning to normal in 2024 with a slight weakening in the economy. So GDP growth will not be robust in 24, but inflation will be down. Now, with a backdrop of a slowing economy and reducing inflation, they believe that will be all the Fed will need to begin to reduce interest rates. I've heard speculation all over the place about another rate hike, rate reductions, how many there will be. I mean, the most I've heard is 6. There is a very large firm, and I shared it with you a few weeks ago, that believes they're going to have 6 rate reductions in 2024. The Fed will do whatever the data tells them that they should be doing. But I think with a slowing economy and inflation becoming normalized, we're going to see the Fed begin to reduce rates. Don't know how many that'll be, but most people believe that they'll start that in March, actually, fairly early in the year. You know, it's only 2 months away. Gosh, we're already into 24. Questions around potential recession risk and the inflation outlook will likely persist, but the base case, this firm says, is for the U.S. Will involve in a soft landing with no recession. And I've shared that with you from the beginning of 23, that based on the people that I listen to and respect, no recession, soft landing means normalized inflation with no recession. Maybe a slower economy, slower growth in GDP, but no recession. Among equities, which are stocks, valuations present us with opportunities. By looking for undervalued areas of the market, defensive stocks are attractive. Value stocks are also well positioned. I'm going to talk more specifically a little bit later in the program about specific sectors of the stock market that this firm, and it's just a repeat of what I shared last week, because a lot of the big guys are saying the same things. And I've told you over the years, the way I create my opinions about markets and economies is not because I'm smart. It's because I listen to a lot of people and try to determine what the consensus of opinion is on these things. And consensus of opinion is, say, 60% or greater agree. And if that's the case, then I'll research that a little more closely and make a determination about what I want to start sharing with clients and how I think that might affect where we put money, what we're doing. So there you have that. All right. To be clear, to reiterate, we expect the GDP growth to slow in 2024. This is due to the lagged effect of the Federal Reserve rate hikes. It will slow the economy, along with customers being more, consumers, I should say, being more cautious as household excess savings begin to deplete. Last week, I shared a lot of information where we were bullish on 24, but listen to this. I'm going to quote this from the material. We expect monetary loosening to drive a strong GDP growth rebound over 2025 to 2027, which will also be facilitated by supply side expansion in terms of labor supply and productivity. So, if what I shared last week is correct, and we have a good 2024 in the market, they're saying that the rate reductions will cause 2025 to 2027 to be a bull market. Man, 24, 25, 26, 27. If that's the case, of course, you're going to have corrections in there. Don't get me wrong. It's not going to be a straight line up. But if this turns out to be true, and we'll talk about it in 2027, we'll look back and see if what I'm sharing here is correct. But if that is true, guess what you need to do? You need to be invested. Just plain and simple. All right. Yeah, no guaranteed portion of a portfolio. I'm just kidding. Some people need to have that, and that's fine. By the way, let me reiterate what the opening of this program says, and it's always true. Never act on what you hear on this program. Never invest or plan or make any decisions based on what you hear on the program. Make sure you talk to your advisors before you make a decision. Okay, this is just information. That's all this is intended to be. All right. So inflation normalizing in 24, GDP growth to eke out a small positive number. Higher bond yields lead to weaker growth in the, but still positive in that market. We expect the Fed to cut interest rates meaningfully in 24 and 25. All right, we have gone right through the mid part of the break, or mid part of the program, I should say. So let's go to another 2-minute break. Pick up the phone and call me with your comment or question right now. Pick up the phone, start dialing so we can take your call first when we come back from the break. The number is 252-561-TALK, 561-8255. And again, your name will go into the drawing for the dinner for two at Ottavilla. I'll even pay the tip. Would love to give you a meal. Talk to you in a couple of minutes.
Aiden Golf and Country Club invites you to become a member. Come tour our beautiful clubhouse, ballroom, and facilities. For a quality golf experience, sign up for our discounted special membership rates, low monthly dues with no quarterly food minimum or assessments. Folks love to play golf at Aiden Golf and Country Club. Cool off at the pool all summer. Enjoy excellent food and beverages from the snack bar. Even store your own cart, unless you like to walk. Call 746-3389 for special limited membership rates at the Aiden Golf and Country Club.
My practice has been built on accessibility, responsiveness, and a willingness to be proactive for my clients. I'm not afraid to make recommendations relating to your investments and planning. I do hope all of your financial decisions are good ones, but let's not rely on hope. Let's roll up our sleeves and get to work.
Jim has attained 3 professional designations: Certified Financial Planner, Chartered Life Underwriter, and Chartered Financial Consultant, which entails 20 courses of study with examinations and a comprehensive national board exam, administered by the Certified Financial Planning Board. Jim has been practicing in financial services since 1979, which includes investing, planning, and insurance to help you meet your financial goals. Among the many awards Jim has received in his career is his selection to the Guide of the Top Financial Planners by the Consumer Research Council of America. So if you want to work with someone who is working for you, call Jim at 756-4700 or email him at planning@financiallyspeaking.com. That's 756-4700 and planning@financiallyspeaking.com.
Welcome back to Financially Speaking. Jim Taunton here. No calls. Sad state of affairs. This firm, this is Morningstar, by the way. I think everybody knows who they are if they have any knowledge of investment field and the services that provide us information. They are forecasting GDP, real GDP, 2024, 1.4% positive growth. 25, 2.1, 26, 3.1, 27, 2.8. Those are good numbers. They are also forecasting inflation for 24 to be 2.0, even below what I prognosticated last week. They're forecasting for 25, 1.6. And 26, 1.6, and 27, 1.9 inflation. guys, and this company is renowned. They are very well respected in the industry. If what they're projecting here in this information that I was able to assimilate from them, we're going to have some really raging bull market here shortly. And as I mentioned to you last week, I should say, because interest rates are going to be coming down, bonds are going to appreciate. So you'll be getting the yield or coupon on the bond, the interest, plus you'll get an appreciation of the share price. So if you own mid to long-term bonds, for goodness sake, don't sell them now unless we want to be more aggressive and move some of that into equities. That's fine. But if your portfolio or your strategy calls for a certain percentage in fixed income and you're in it now, you don't want to sell it unless you want to extend your maturities out. If you're all stuck in short term, which a lot of people are because short term rates have been higher than long term for a little while now, you may want to extend your maturities because longer maturities will appreciate more when interest rates go down than shorter maturities. They're more reactive to interest rate movements. So that certainly would be a strategy. Now, is there any particular area in the equity market that Morningstar is seeing will overperform? That I told you last week that small cap is really being talked about. In particular, small cap value is being talked about. And this information that I have in my hand is no different. It's reiterating exactly what we shared with you last week. This is the Morningstar Style Box grid that I'm looking at. It's got 9 boxes, and these 9 boxes are created with axis titled Value, Core, and Growth, and then the other is Large, Mid, and Small. So you crisscross all those, it creates 9 boxes. And they gave me a number here for each style, each sector, each box, as to how over or undervalued they believe that sector is. For example, they got for large cap value 0.86, so they believe it's undervalued. 1 would be fair valued, so they believe it's undervalued. But on the other hand, large cap growth, they've got it 1.02. They believe it's overvalued. Same thing with small cap growth, overvalued at 1.04. But small cap value, they have 0.61, which is the most undervalued number on their grid. So I would suggest that if you're a little more tactical with your portfolio and you do make adjustments, you and your advisor, I would say, Mr. Advisor, I think small cap value may be a place we want to overweight a little bit in this coming year. What do you think? And talk about it. Do your research first, though. Get on Google. Go on the Morningstar.com. Whatever it is, whatever sources or resources you have, do your research. Be ready. Be loaded. Ready for bear. When you go to see an advisor and present your facts and see what he comes up with, maybe give him time to do some research and come back to you. But, that's what people are seeing that know a whole lot more and have a lot more at their disposal than I do. Okay, I'm just repeating what I'm hearing more or less. We haven't talked about real estate, which I do want to do since we have the time. I didn't know that we would have the time. real estate, not as a whole, but certain sectors of the real estate market, they believe are going to do well because of the reduction in interest rates. Let me just read these to you. Commercial real estate. They believe there's going to be a cash flow impairment here. And that's due to a lot of factors, but they do believe there's going to be a cash flow crunch with commercial real estate. The expanding Middle East conflict will cause an energy market disruption. So the oil price stocks will probably go down. Cheaply priced energy assets like U.S. MLPs and European energy will be an offsetting position for that. All right. What about the prolonged Ukraine-Russia conflict? How's that going to affect everything? Well, energy, food market disruption, European economic pressure will be in vogue because of that. Let me move on down here. Developed market sovereign deficits, such as the one the United States has currently. Increased term premium. So investors will be demanding a higher long-term yield on long-term instruments because of the risk of the deficits actually causing a crunch for some governments. United States is not there yet, by the way. They may be sometime in the future, but the United States is not there yet. We have plenty of tax income to service the debt, but we need to start making some changes in the way we do business. If the United States was a corporation, it would be a very poorly run corporation. It would not be a stock that you'd want to buy based on just the pure dollars going in and coming out. So I wish someone would have the political will to make some changes that we need to make, but we'll see what happens there. All right, that's all the information I have for you. And I'm going to have music in my ear just any second now, I know. Here it comes. I can hear it. There it is. I caught the producer off guard because I'm about a minute and a half early. But, you know, I'm not going to sit here and do a song and dance, tap, soft shoe routine and what have you. If I've given you all the information I'm going to give you. Didn't get a call, maybe next week. Call me. If you're sitting there thinking, man, I should have called him. Call me. Always leave a lot of time available for calls because I'd rather talk to you. But as always, this is Jim Taunton helping you make all of your financial decisions good ones. Good night, everybody.